Hi, fellow traders, and welcome to my webinar, Day Trading Your Small Account, the Average Joe Way. Now, everyone who starts this journey in trading would love at some point to consistently make money. They may start looking for big scores, but eventually they realize that consistency is the only way to make a living at this. So how do you get this consistency? You get it through hard work and time. I know you were thinking I was going to say dedication, but it takes time. Yes, you got to be dedicated, but in this industry, there is no substitute for time. And if you haven't figured that out yet, you soon will. In the description, I said I was going to share with you how you can make $200 a day consistently from a $2,000 account. Some people will say that is a stretch because we're talking about a 10% growth a day. But that's only if your account resets at $2,000 every day. We're looking to grow our account every day. So let's say we do make $200 a day, and that's $1,000 at the end of the week. So our $2,000 account becomes $3,000, in which we'll only be looking to make 6.6% on our account. Now after week 4, week 3 you get 4K, so you're only looking at 5%. So you guys get the picture. Plus, there's some other things behind that. It's not just we're going to make $200 a day consistently from a $2,000 account. There are going to be up days, there are going to be down days, but we're looking at an average. But you get to this point by starting small, building a foundation, and developing skill. This is what my small account program focuses on. You have to learn how to average making $50 a day consistently and growing it from there. Now, if you're already trading and you're making several $100s on a trade, but every now and then, but you're still in the week red and you can't really find consistency, then this program is for you. If you're brand new and you're trying to find your way, this program is for you. It's for anybody who's struggling and trying to make a consistent profit in the market. Forget trying to make a living now. You just have to be profitable. And you have to be consistently profitable. And that's the same process that I went through. Now, if you continue down the path that you've been going and you're so inconsistent, it's highly unlikely that you're one day going to automatically be consistent just by doing the same thing that you're doing now over and over again. Doing the same thing over and over again that's not working is a sign of insanity. And yeah, sometimes the market will drive us insane, but there's no law that says you have to stay there. So what I'm going to share with you in this webinar is going to be my process that I use to get to this consistency and what I'm going to be focusing on in this small account program, which is everything that I use to get me to where I am. So now let's get this legal stuff out of the way. I'm not a licensed financial advisor. I'm not a registered broker, which means I do not provide investment advice or financial advice or make investment recommendations. Average Joe Trading is not in the business of transacting trades for anyone else other than myself. Nor does any service I provide constitutes a solicitation, recommendation, promotion, or endorsement of any particular security, other investment product, transaction, or investment. I make every effort to accurately represent myself and my ability to teach you how to trade. But there's no guarantee that you're going to make money just by participating in the education chat room, the mentor sessions, or the weekly education webinars. It's not a get-rich-quick scheme. This is not a guarantee of earnings. I can't guarantee that you're going to make money because I don't know what you're going to do once you leave me. You're responsible for any results that you achieve. I make every effort to provide you with quality information, strategic guidance, anything you need to achieve these results. But in the end, it's going to be up to you to develop the discipline in yourself and the wherewithal to follow the process and see it through. So most of you know a lot about me, so I'm just going to share some basic information for those of you who don't know me, who may be new. I'm an automotive engineer as well as a professional educator. I was teaching in the classroom for 18 years. I've been in and out of the market since 1999 when the internet craze kind of started. I opened up an Ameritrade account back then, but I didn't really get into day trading until full time until January 2014. I started alongside my daily job, my teaching job. And I started 2014 with $1,500, and that was a bonus check, the only bonus check I ever got from teaching. And I think it was a mistake with our salary calculations is how I ended up with it. But got $1,500, and I wanted to do something with it. I was at the point in my life where I had 2 kids, and I needed to start planning for their future. And I wanted to be able to give, my daughter wanted to play softball. I didn't want to have to go to Walmart and buy her a cheap bat to play with, these other girls that, parents could get them a decent bat that they could hit and it doesn't make their arms or anything hurt. There were some things that were really bogging me down that made me want to make a change in my life. And I realized that I wasn't anywhere near I wanted to be. There were so many things I wanted to give my family. So I took the plunge. And throughout 2014, I had to refund it 5 or 6 times. I tried to go back and figure it out. But the way it was with SureTrader at that time, it wasn't a $500 minimum. It was, you could put in $100. You could put in $150. It didn't matter back then. So every time I made a little bit of extra money, I did some work on the side so I can put in to keep my trading going. So it amounted to me starting over 5 or 6 times, which means, I put significantly amount more in my account than $1,500. So one of the things I want you to understand now is you may start with $2,000 or $1,500, but through the learning process, you're probably going to have to add more money to it. There's really no way around that, especially if you're going to start learning with your money. Now, we don't recommend learning with your live money. I did it because I didn't know any better at the time. And, that's how I ended up doing what I was doing. But just understand and just know that when you put money in your account, that doesn't mean that you may not have to put more in it as you go along and as you're learning. But by the end of 2014, I had $9,800 in my account. Don't get that wrong or twisted, because that doesn't mean that I was profitable by $9,800. That's just how much money I had in my account. I put more money in out of my pocket. So, I was red on the year, but based on how much money that I had put in, I was still behind. But I kept $5,000 in it, took the rest out, and still had the best Christmas that my family and I had ever had up to that point. And that really, you don't know how emotional I was that Christmas. Being able to give my kids everything they wanted And I know that's not what this is about, but to be able to do it finally after so many years, it was just an incredible feeling. But I had a newfound focus and drive. So in 2015, I started with 5K at the beginning of every month. My goal was to wire out everything I made over 5K. And 2015, if you were in the market back then, you knew 2015 was an awesome, awesome year, a real solid year. And to make this even more um, dynamic is that I was only trading to the long side. I did not short stocks. In 2015, I was still terrified of shorting stocks. Everything I did to make this money in these 8 months was longing stocks. And I caught some good short squeezes, and it was just an incredible, incredible time. All of my trades were uploaded into Profitly. It's documented on my blog. You can go back on my blog back to 2015, and it talks about the whole year. You can see the thoughts, hear my thought process through all of those trades. And I even did a video with Ross at Warrior Trading. And is the last time I checked, that video was still out there on their site. You may have to look up, do a search for Ed at Warrior Trading, or Edwin, which is, they changed my name from Ed to my full name, Edwin, I guess, so nobody could connect the dots. But, that might still be out there. And that talked about my journey too. So in July of 2016, I was doing a lot of mentoring. I was working with a lot of traders that were trading smaller accounts. And I'm like, look, if I'm going to work with you guys, then, part of my education model, which is what we're going to look at in a minute, is based on modeling. And if I can't model it, then it's not going to work. So then I started modeling it. I started streaming my trading platform live. And that's what got me in trouble with my former family. They didn't like the fact that I was streaming my platform live. That wasn't part of their model. But I had a strong conviction that this is what people that were in my position starting out, when I started out, this is what they needed. They needed a model of success. They didn't need somebody telling them they were doing it. They needed to see somebody actually doing it. And that's what I founded Average Joe Trading on. That's the premise that I founded it on. And that's why, I stream my platform live every day. You see me melt down. You see me make money. You see me go through every range of emotion that a human can go through. And that's what learning is about. So, I've done that 5 times since 2016. And up until then, I had made about 46K. But you got to understand, starting over with $1,500 is not a walk in the park. It's an extreme struggle. And, what you will see starting second quarter, if you're a part of this program, you will see. And they're going to be struggles. But the purpose of this program is to help you build that foundation that's going to take you to the next level. That's what this whole purpose is. All right, so this is, I look at this every day. A journey of 1,000 miles begins with a single step. And I've used this a lot. I use this in my teaching when I was a Scoutmaster. I use this with my new scouts, because the final journey was to be an Eagle Scout, and I know it looks like 1,000 miles away. So, I always talk to them about this, and that you'll never get there if you never take that first step, and unless you continue to take those steps, you're never going to make it. So, before we go on, I really have to share with you 3 people that I have to give credit for helping me see the light before I really buried myself. And you could look up these guys on YouTube. They were very instrumental in helping me get to where I am. First, and they're not in any particular order, but Dr. Eric Thomas, also known as E.T. the Hip Hop Preacher. And what I learned from him is the power of small. That in order to blow up big, you have to master the small. And that's how I started my progress. That's when everything turned around for me. When I started focusing on the small things, the little things I needed to do to improve. And I started focusing on one trade at a time, one day at a time, and stopped thinking about how much money I needed to make a day or a week. I started looking at what are the little things I need to do in order to make winning trades. And then it kind of went from there. Daymond John, who is the founder of the clothing line FUBU, and most famously now known as one of the sharks from the TV show Shark Tank. And he taught me about the power of being broke. Now, not many of you has been as broke as I've been. My son was born prematurely. He was born 4 months early. And at that time, my wife didn't have the best of jobs. And, I was teaching, so, that was limited. That income was limited. And he had to spend 3 months in the hospital. So when he came out, we had over $1 million in hospital bills. So obviously, I had to take out a second mortgage on my house. And back then, they were allowing you, it didn't matter how much money you owed, you could take a second mortgage out on however much your house was worth. So I got screwed on that deal. And then ended up, I had to declare bankruptcy just so I could make sure that all of his bills were paid and that he could continue to get the medical attention that he needed. And, I would go through it again if I had to. There's never a day that I say to myself that I would never do it again for him. Because he's healthy, he's happy, and he's thriving. And there's no price that any father can pay, that could replace that. So I know what he talked about, and he helped me understand how to use that in my motivation to keep me on the right track and to do the things I needed to do to be successful. And the last guy was Chris Gardner, who he's most famously known for that movie, The Pursuit of Happiness, which is the story of that segment in his life. And what I learned from him was to start where I was with what I had, because what I had was enough. And, I did blogs on all of this, so if you want to go and read my blogs on these, I think I've got links to them on my website anyway. You could click on them and it'll take you right to the blog. So I'm not going to waste a whole lot of time talking about all of that, but I had to give them a shout out because they're the ones that helped me understand the process I needed to go through in order to get to where I am right now. And if that hadn't happened, I probably wouldn't be talking to you right now. So this is my education model. And it's something that I developed based on the exact same model that I use in the classroom for over 18 years. It's what I still use in the new teachers classes that I teach for individuals that are looking to make that transition from industry to the classroom, which is the same thing that I did. It's a model that I know works because I use it year after year after year with different types of students and different learning styles. It didn't matter because what I had to do was come up with a way to address each learning style, each learning ability of all the students in my class. And I didn't want to have different teaching styles for different groups of students. I needed to come up with something that encompassed everybody. And that's kind of where this model came from. And you can see what we're doing is we're connecting life experiences with new learning. We do that through the trader's mindset. So as soon as you join the community, you have access to the last the trader's mindset workshop that we did. Now we will do a new one coming up here toward the summer, but the recording from the first one is available to you. We've got new learning, the trading classes, the live trading webinars, all of that we get. We've got guided practice. We do some simulated trading in the market replay simulator in some of the classes that we do. We may do some limited live trading. But it's all to help guide you and bridge that gap that's missing from all of the knowledge that you gain that you can apply. And reflection. Reflection is a key. Journaling your trades. Really, and that's a model that I share with you guys as well. But what ties all of this together is mentoring. And you can see mentoring, and it doesn't have to be paid mentoring, one-on-one mentoring. That's not what that's about. This is what happens every day in the chat room. When you ask me questions, when I'm explaining what I'm doing, when I'm talking through my trades, that's all part of mentoring. And yeah, if there are some that want that one-on-one attention that do pay for that time, but that's not what all this is about. This is about what we do every day. So I try to model this, every day, every week in the Average Joe trading community. So I wanted to share this with you so you can understand why I do the things that I do and why these things are the most important. Now, how many of you have heard this, trading is easy? All you need is a strategy. All you need to learn is what I'm teaching you. And, it's going to be easy. On the surface, it does look easy sometimes. Gurus will come and tell you all you need to do is buy this DVD or take this course, this online course I have, and you'll be on your way. Yeah, you'll be on your way, all right. You'll be on your way to losing all your damn money. Because every educational program that I've evaluated, it has all the fundamentals and it has all the right words, everything to get you motivated. But they forget one thing. They forget that you need to know how to apply what you have learned. And that's what my education model covers. Why do they leave it out? Because it takes more time and it requires live trading demonstrations to help you understand how this thing is put together. And in some cases, they're unwilling to do that. It's not enough bang for the buck. But, some of them will have recorded. They'll have live trades recorded, but they're sped up. They're edited and it really doesn't give you a good feel for what actually happens in a trading environment. That's why I trade live every day in the chat room, in the community. That's why you see what I do live every day, win, lose, or draw. When I make a huge mistake, hell yeah, I'm embarrassed. But guess what? You learn from that. I learned from that. So, this isn't a good marketing strategy, because it's not what the public wants to hear. Because, it's only common in human nature for us to want to be connected to a winner. It's, we call these people bandwagon traders. They just want to be connected with whoever's winning at the time. You never learn anything that way. You never become consistent that way. And it just doesn't work. So, yeah, it is not what most people want to hear, but it's the truth. And one thing you're going to hear from me every day is going to be the truth. Whether it's right, whether it's nice or not, it's going to be the right thing. Now, I get the comments all the time that, I make, in my trading, I make it look easy. It looks so, you make it look so easy. But you guys remember this, the Geico commercial back in the day? So easy a caveman can do it. Well, it seemed to be a real easy ad campaign. It caught on real good. People just were going crazy over it. They even spun a TV show based on this ad campaign. But they also found out that it wasn't as easy as it seemed, because they did not have a solid foundation to build a TV series, a TV show off of it. The TV show sucked because they did not have any foundation of material to really build off of. So it made absolutely no sense. And, I'm here to tell you that below the surface, no matter how easy it looks, it's not easy. If it was, everybody would be doing it successfully. Nobody would be working. We couldn't even go to the fast food restaurant because everybody be trading. Nobody be working there. But everybody tries, but they quickly realize that it's not that easy, and they fold up like an envelope. Why? Because nobody wants to take time to build a foundation they need to hold them up, while they're learning. In most cases, it's not even a thought. They don't even think about it. So the goal of my small account program, the main goal, the primary goal, is to build a solid foundation. This is what is going to hold you up and keep you going when those storms come. And believe me, those storms will come. But you don't want your house to look like this. This house was built on it was built above ground. There was no foundation below the surface. So when the storm came, and it didn't even look like it was a bad storm, it just took it off. It had nothing there. So if you look at this house, you had the ground washed all the way from under it. I mean, you still got water rushing through, flood waters. You can tell that this foundation was solidly built, and it was built deep enough and strong enough to hold this building up, even though the ground around it is gone. This is the type foundation that we need to build, and that we're going to build in this program, because that's the only thing that's going to sustain you through what we're doing. Think about, well, I could tell you some, professional traders that are out there that put content out. Nate from Investors Underground. You got Canal from Bulls on Wall Street. You got what's his name, Eric Deckmar. All of these guys will tell you that it didn't happen overnight. They had to put in their dues. They had to weather some storms. But they'll all tell you that if you took all their money today and left them with $5,000, they have the foundation built that will allow them to start over and make money again. That's the kind of foundation that we're building here. That no matter what happens to you, no matter what comes your way, you're going to be able to start over and continue to grow and continue to develop. And that's our primary focus here at Average Joe Trading and the small account program. Now, what are the things that we're going to do to build that foundation? Well, the purpose of it is to give you that stability to withstand the storms that are going to come your way. Like I said, you're going to have storms. In trading, it forms the base that's going to sustain you in your trading career. Strength and stability will lie in your foundation. You shortcut that, and your trading career may be short-lived. You can have the best laid out trade plan with solid direction, but if you don't put your time in to build that foundation, the first storm that hits you, it can come crashing down. And it will not be pretty. And you probably won't have insurance to protect you. Most issues that surface during your trading career are actually related to your foundation. At different points, cracks are going to appear. Now, sometimes it'll require a little patchwork here, a little review here and there, going back to the basics. But sometimes it's going to take you going back and replacing a faulty part in your foundation, something that you built upon that was faulty, and you just start at the bottom and work your way back up. It happens. I did it. I did it last year. You saw it happen in the chat room, and now, I've got the best month in the last year or so. I've definitely had the best quarter going. And I started from the beginning. I had to go all the way back and fix myself. I had to dig up that part that was messed up. I had to call Ramjack and have them come in and fix me up so that I, prop my foundation up, get it set back right, and now I'm on the way. So, there are things that you're going to need to really focus on. And this is what we're going to focus on here, this last part of this webinar. And these are the things that you're going to need in order to establish that consistency and make your your trading career. Number one, you got to establish your why. Why are you doing this? If all you're going to say is I'm doing it to get rich, you're probably not going to stay long, because that means you're not going to want to put in the hard work you need to get there. You're just looking for a quick buck. So you got to establish who you are as a trader. What do you like? What are your tendencies? What are some things that you're going to have to work on and change about yourself in order to be successful? Because in trading, we're our own worst enemy. Our natural human nature is what really prevents us from making money in trading. So we have to establish what those traits are and make them work for us and not against us. We have to understand technical analysis. And my technical analysis is simple. I can make it sound as hard and as complicated as it wants to be. But I'm from the KISS school of everything. I like to keep it simple, stupid. As simple as you can make it, and as and the least amount of moving parts you can add to what you do, the more consistent you're going to become. And so we filter out all of the fluff, all of the noise, and we focus on only the things that's going to help us be the best and most consistent trader. We're going to talk about choosing the right stocks to trade. Understanding proper position sizing. This is critical. Choosing the right stocks to trade and understanding the right position sizing in a small account is critical. And these are the things that we're really going to focus on. Developing a viable trading plan. You got to develop a trading plan, and then you have to learn how to execute it. Because if you can make the best plan in the world, but if you can't execute it, and you don't understand how to execute that plan, you're never going to make any money. And then the anchor to the whole thing is my reflection model. This is why I'm as successful as I am, because I reflect at night on every trade I take. Now, if you're taking 35 trades a day, there's no way in hell you're going to be able to reflect on every trade. You're over trading, at least in my opinion. But I really believe you have to reflect on each trade you take so that you can extrapolate what you did right, what you did wrong. You want to correct the mistakes that you're making, and you want to enhance the things that you're doing right so that you can continue to do them right. The best way to do that is in reflection. When I'm doing mentor sessions with people, if they don't have reflections of their trades, there's not a whole lot we can do to help them. Because without that reflection, I have no idea what you're thinking in a trade. I don't have any idea of what your goals were, what your process was. Nothing. And without that, we can't help you. So reflection is key. So these are the things we're going to talk a little bit about each one of these to wind up this webinar, and tell you how to get signed up with us if you want to join us on this journey. If you really want to learn, dig in, and learn what it takes to be a consistent trader, then join us. It doesn't cost a lot of money. We'll talk about that, here going forward in a minute. The first thing we need to focus on is our why. And why do you do what you do? Why do you want what you want? I want nothing but success for you. I want you to get up every day and grind, working towards your goals. But you have to want it. Your why must be strong enough. If not, any talent that you have that gets you to a good level in your trading is not going to be sustainable. Because any wind that comes along and knocks you off your pedestal will start you in a downward spiral. And if your why isn't deep enough, you'll never make it back. Why do you think 1 in 3 jackpot winners, lottery jackpot winners, are broke within 3 years? Even more go broke within 5 years. It's because they do not have the character to handle their financial success. They never had a reason to maintain it. Nothing to drive them. They never developed a why. Your why is what's going to help you withstand the storms that's going to come your way. It's got to be deeper than money. Money is just shallow. There's no foundation dug in. So when it gets tough and it doesn't come easy for you, you're going to quit. You're going to fold, like I said, you're going to fold up like an envelope and get mailed to the next city or whatever. But it's just not going to happen for you. So you have to establish a why. And it has to be strong enough, has to be deep enough, that's going to help you withstand these bumps and bruises and these storms that are going to come your way. There's just no way around that. So we have to establish who we are as a trader. Once we determine why we're doing this, we need to further to develop that character, define ourselves as a trader. We must find that trading style that suits us and develop the right mentality of being a trader. What's our schedule that we can trade with? Will we be able to day trade or swing trade, or are we going to do the all day holds? We can't become a bandwagon trader and develop that backpack mentality. You know how when we were in high school, 15 minutes before the class was over, we're packing up, checking out, ready to leave. And usually the last 15 minutes is where everything is summed up. At least that's the way I ran, my classroom. So, we can't just pack up and leave and get ready to move on before we finish learning. And as far as being a bandwagon trader, it as humans, it's our natural instinct to gravitate to a winner, or someone who portrays himself as a winner. So when we see people posting winning trades and incredible gains, we automatically want to run to them and learn what they're doing. We want to attach ourselves to a winner. And oftentimes these guys are just repeating or copying what they see, and they can't really explain to you what you're doing. So as long as they can explain to you what they're doing and teach you, then you found a spot that you can potentially learn in. But we must pick a spot. We can't keep moving from spot to spot. We find something that feels comfortable and we dig in. Things aren't going to work perfectly from the start, because oftentimes whoever you're following, they've gone through the fire. They've gone through the storms. They paid their dues. Now you're going to have to pay yours. So jumping around from trader to trader or guru to guru or strategy is not sustainable. You have to be yourself. You have to develop into you as a trader. Now, if you don't want to put that work in and you just want to find somebody you can piggyback off of, a copy, you're not going to make it in this industry. I don't know if somebody has made it in making a living copying somebody every day, let me know. I haven't met them yet. And that's just not a sustainable strategy. You have to develop you. And you have to be willing to put in the work for you to grow into who you need to be, as a trader. So these two things, the trader mindset workshop that you'll have access to, helps you go through this. It helps you define your why. It helps you understand who you are as a trader. To look at things that happened in your past that define you today, and things that we have to change, because being a successful trader is going against human nature, and human nature is pretty tough. So this is very important, very, very important. We also need to make sure we find in the right stocks to trade. If we have a small account and can only trade 1 or 200 shares at a time, it's critical. It's very critical that we find the right stocks, because trying to trade stocks with 15 to 20 cent move potential, it doesn't make sense. We can't make money on it. We'll lose every time because commissions and fees will eat us up. And, in reality, picking the wrong stocks is a major reason that newer, lower funded traders fail. Now, and I have a simple process that allows me to quickly and effectively build a tradable watch list. I do this every day in the community, right there in front of you in chat. And eventually, you'll be able to build off of this and start building your own watch list around stocks that really fit your trading style, stocks that you have developed, for the lack of a better term, in intimate relationship with. There's certain stocks that I love trading when they come around. and I automatically gravitate to them because I've learned how they move. And I find stocks like them that move like them that I tend to gravitate to. And over a period of time, you're going to do that. And that's how I'm able to find stocks that move, multiple points that allows us to make some decent money off of. But the key is identifying these stocks that's going to help, that's going to give you the opportunity to make this money. Now, it doesn't mean that they're going to make the whole move all the time. We're set up, the move is sitting there, and all of a sudden, it turns and goes the other way. It's going to happen. But you have to be ready for that. But the key is we're in position for those stocks that have that potential. And that's what we do every morning. I use trade ideas, and I don't scan the night before. I used to use FinViz and try to scan, but 75% of the stocks that showed me it had potential to move never did move, never got volume. So I don't waste my time anymore. I only come in the morning, and I'm looking for stocks that are actually moving that day. And it works out pretty well. So all we're trying to do is make sure that we have the right stocks that have that potential to move and make us money. And it's even more critical, with a smaller account and not being able to trade with a lot of position size. Sure, if I could go in 5,000 shares and get a 20-cent move, I'd take it. But with a small account, you can't do that. And I do not trade low dollar, low float stocks. It can go against you easier than it can go for you. So I stay out of those. I pick stocks that are safer and that tend to follow a trend a lot better, and it reduces a lot of the stress, and you're able to maintain and keep your mental energy level higher. So that's very, very important to me. Understanding technical analysis is critical for you as a day trader. But too many people overcomplicate this. Again, I have a simple process that helps me only look at the information that's pertinent to my strategy. That will be a key moving forward. If you don't need it, take it out of your mind and off your chart. If you don't use Bollinger Bands, why would you have them on your chart? And why are you trying to learn how to use them if you don't use them? If you don't use Fibonacci and it's not pertinent to your strategy, then why try to use it? If you want to learn it, do that, in the simulator at night when you're trying to practice, see if it's going to benefit you or not. But don't bring it into your live trading. Take it out of your mind and off your chart. The cleaner your chart is, the cleaner your head's going to be. And we start off every day with limited mental energy. If we burn it up in the first 30 minutes, the rest of our day is going to go to pot. And that's not what we want. So basically, just to give you an idea of what I do, I start every day out looking at the SPY to see where the market is trading that morning. I also look at the S&P futures, as well, to see what the market did overnight. If I see a big spike or a big dip, I check for the news. I know the news is more fundamental, but it helps with our technical analysis. Then I analyze the overall market. And it doesn't take long. It's real simple. You're just looking at, what's going on. What's the market doing right now? I stopped trying to predict the night before what the market's going to do. Because if you predict it and you've got everything set up based on your hypothesis and it goes the other way, automatically it's going to agitate you. You're going to be mad, and then you may tend to want to force yourself on the market or try to force it to do what you want it to do. And we all know you can't do that. You know, the market is way too strong for little guys like us to even think about trying to move it. So I have to wait and let the market tell me what it wants, and then go from there. I look at what the current market cycle is and how to analyze it, our daily charts. And these are all things that I go over that you will learn. And it's real simple. These are simple things. This is the easy part of trading. It's just learning this. Once you learn it and you do it, it becomes second nature. We're going to be getting into the hard part of trading here in a minute. And that's where the rubber meets the road. But all of this is kind of background and fundamental stuff that I share with you to help you get, hit the ground running. This is the foundation that you're building. You're digging up that ground and you're building that foundation. You're putting all of this stuff together so that when you get started, you're going to have this foundation to fall back on. You're going to understand exactly what you're doing, why you're doing it, and you're going to have that dug in. And you can't, unless you go in and dig it up and throw it away, it's going to be there to help sustain you throughout your trading career. Now I'm going to share, I share with you my basic candlestick formation chart. It's like 5 basic candlestick formations. And it's real simple. You can't go wrong with it. I'll share with you how my charts are set up. What exactly I'm looking for. What indicators are important to my strategies. I'm not going to tell you about stuff that doesn't matter to what I'm not doing. And when it's time to adjust, we go over that step by step. Why are we adjusting? What's going on in the market that causing us to adjust what we're looking at. So it's just a matter of developing a process centered around only what's important to your trading style. If you don't use it, you don't need it. You don't need to learn about it. If you're making a pretty good living, don't go in and screw it up just because, something sounds more technical and it might make you sound smarter if you use it. That's the wrong mentality to bring into this. Okay, so understanding proper position sizing is critical. It is 100% critical, and especially when we're trading with a smaller account, we don't have the capital. Determining how much of a stop to trade is overlooked. Sometimes traders just randomly take position size, or if you're following somebody, you just trade whatever size they're trading, and that's not the right thing to do. We will take. I know a trader shouldn't take a set position size for all circumstances, but when we're just learning how to trade and we're getting comfortable in the market, we're going to take set position sizes. And then once we get to the point where we're comfortable and we can trade 100 share lots and we're able to allow the trade to work, to get in when we're supposed to, get out when we're supposed to, and we get comfortable, then we're going to start being able to move that position size. Like, I still have set position sizes, but they change. If a trade doesn't if the setup doesn't look as good, then I may not trade full size. If I miss my entry, I may not trade full size. I may go half size. But we can't really get to that part until we actually learn how to trade. And we understand what we're doing when we're in a trade. So once you grow, then you don't want to take the same position size over and over and over again. That's going to hurt your performance. So you're going to see us progress. You're going to see us start out taking 100 share lots because you need to get comfortable. You don't want to, again, you don't want to overcomplicate the process when you're just learning. So it's easy. Take 100 share lots, build your trading plan, set a stop, set a profit target, and let the trade work. If it stops you out, you take it off at your stop. If it hits your target, you take it off at your target. This is the only way you're going to build confidence in the market. And once you do, we're going to look at why it's important to adjust your position size. If it's a good trade, a good setup, then you want to trade full size. If it's a bad setup, if it's a bad setup, you don't want to trade it at all. But if it's a setup that you have some reservation about, you may not want to go in full size. And it may be smart enough that you don't. If a trade is going to need more room to work, then you're going to have to reduce your position size to allow for that trade to work. And we talk about all of that stuff. It's very, very important that you get that down, especially trading a smaller account. Because how many times do you set your stop tight? And it's like, I'm in and I got a 10-cent stop. My stop is tight. But the average range on each candle is 50 cents. So if you set a 10-cent stop, you know you're going to get taken out. So if you need to give it more room, then you're going to have to change your position size. And that's going to be critical. Understanding that is going to be critical. And you're going to see that in action, every day when we're trading. Then we're going to have to analyze how much room do we need to give this stock to move. Because the worst thing we can do is get in, give it a 10, 15 cent stop, and the stock has 50-cent swings. It's going to stop you out every time. So the next thing, and this goes along with it, is developing a viable trading plan. We have to have a plan before we go into any trade. Because having a trading plan before starting the trade is like having a map before you start to travel. Nowadays, we don't use maps. We got GPS. We got the Waze app. So if we're going to start a trip, most of us aren't going to start a trip without our GPS. And that's pretty much what our trade plan is. It's going to tell us exactly what we need to do to get, or needs to happen to get to where we want to go. And trading this market without a trading plan, even if you have experience trading in your simulator, it's going to be real challenging. And when you put your money on the line, you're really going to freak out. And I can be honest and tell you, when I first started trading, I had in my mind, I knew exactly what I wanted to do. But when the bell rang and the numbers started flashing, I got that deer in the headlight look. I couldn't enter a trade. And it was writing my trading plan out. And I have a card that I'll share with you guys that I used to fill out so that I could follow my trading plan. It told me exactly what I wanted to do if this stock set up, whether it went long or whether it went short. I was able to write out my profit target so I wouldn't sit here worrying about taking it off thinking that it's going to go backwards. I used that card, I read it, and I kept looking at it so that I would not make dumb decisions. And sometimes I have to go back to that card. It's just an index card that I write down all the pertinent information on, and it helps me stick to my trade plan. So the objectivity and clarity that a good trading plan provides is going to be a real plus, especially when you have to make quick decisions. You know, it's something that has to be done. Also, and this is a key, it takes a lot of the emotion out of your decision making. You know, a lot of people say, you know, we need to eliminate emotion, we need to, you know, trade without emotion. Emotion is what makes us human. It's our edge, it's our advantage. We can't eliminate that. Number one, if we try to eliminate emotion, that's going to take up more energy away from what we should be putting into our trading. So why not take that emotion and use it to our advantage? And we can eliminate emotion from certain things by, you know, number one, with this trade plan, writing it down and just following it, we can eliminate a lot of the emotions that we're going to feel that could be negative. And we could use the positive emotions to react to our trade plan and to put that in place. And, you know, execution is going to be key. That's the hardest part to this. It's, you know, what we're going to talk about next. But execution is the key. Developing that plan first, but having the mental capacity to execute that plan, this is where most people fail. You know, most people can, you know, they get themselves right. They have the right why. They know what they want to do as a trader. They know how to choose the right stocks. They learn technical analysis. You know, they understand the position sizing. They're able to develop a plan. All of these things are relatively simple. This is the easy part of trading. But the hard part comes is when we try to put this in action. When we try to put everything that we have in action in the market. And this is where the rubber meets the road. You know, this separates the men from the boys. This tells you whether you have it together yet or not. Now, there's a saying that I like, and I connect it to this trading deal. Innovation is celebrated, but execution is worshiped. Your trading plan is an innovation, but you're a rock star if you can consistently execute that plan and make money. You know, you've got to have trust in that trading plan first. Unless you have that trust and that confidence in it, you're not going to be able to execute. So having that trust and that confidence is going to allow you to enter when triggered and then focus on just hitting your marks. And you develop this through screen time. There's no substitute for screen time. It's just like that saying they used to have, Porsche, there is no substitute. You know, you either own a Porsche or you don't. You know, you either get the screen time or you don't. There's no shortcut to it. Believe me, I tried all of this artificial intelligence when I first started looking into trading. You know, I got lazy. I didn't want to look for signals myself. So I wanted something to tell me what stock to trade, when to get in and when to get out without having to do all the legwork. But it's just not sustainable in the market if you can't execute. You know, you're a key element in no matter what you do. You know, no matter what else you use, you've got to execute. And if you don't have that foundation beneath your feet, you won't have the confidence and the ability to execute like you need to make money, especially on a consistent basis. Even if you have some automated software, you still have to execute by putting it into play. You know, so execution is worshiped in this industry. And, you know, if you spend thousands of dollars and hundreds of hours on your trading education, and you still can't execute and make money, there's something missing in your foundation. It's just that simple. You just need to identify it and fix it. There's something that you need that's going to help you get to the next level. And you cannot, there's no shortcut to it. So again, innovation is celebrated, but execution is what's worshipped. That's what's going to make you a rock star trader. Now, the final piece to my puzzle, not the final piece to my foundation, is reflection. This is the cement that we pour around all of the steel beams and everything that we use to build our foundation. This is the cement that we pour around it to solidify and seal it. It helps us to identify what we're doing right and build upon that, as well as it helps us to identify and eliminate what we're doing wrong. This is also a key element in my one-on-one mentoring that I do. I have the traders I mentor use the reflection model and reflect on each trade. Reflect on it, print a chart. Everything, I share all of this with you, the document and everything you need so that you can build a Class A journal with reflection for each trade and the chart. And this is what we use in mentoring to go over, because it's amazing what you can see about your trading and how you can identify what you need to do to become more consistently and more profitable. Just looking through that document together, it changes your outlook on trading. So reflection is that cement that holds everything together. It solidifies and seals that foundation, and it allows us to continue to build higher and higher off of it. So with that, sharing with you all of my elements to my foundation, I feel that you can make an average of a couple $100 a day, starting out with just a $2,000 account. You can do it, but you have to build that right foundation. If you can't build that, if you take shortcuts and you're not willing to put in what it takes to get there, then you probably aren't going to make it. But it's going to take developing and building that right foundation. It's going to take you learning how to make $50 a day consistently. How many of you guys have been trading for a while and you still red? You would love to see an average of $50 a day. That means you're green on the week. And if you do that, you're green on the month. It has to start somewhere. Develop your skill. Focus on those small things that you need to do that's going to sustain your growth. Remember, the journey of 1,000 miles begins with one step. So, who's ready to take that first step? My education model is simple, and so is this subscription model. Our members, whether you're monthly, quarterly, or yearly, you're going to have access to all the content. Everything, all the live classes, all the class recordings. By choosing longer time frame subscriptions, you're only saving money. The only thing that you would ever have to pay anything more for is a one-on-one mentoring. Why? Because I value myself. I value my time. But other than that, you'll never be asked to buy any new class or program I bring out or anything. When I update classes, as I do them, you'll never be asked to pay for anything else. Once you're in, you're in. So, visit me at averagejoetrader.com. Join me for starting this for starting and growing your small account program. We're going to hit the ground running here the second quarter, and I'm going to be working with you guys step by step in the morning, and what it's going to take to grow your account. Now, I am going to give a special to you guys that sign up for a quarterly membership. I mean, honestly, I think a quarterly, if you're starting this, and you don't have what it takes to go for a yearly, a quarterly will be the way to go, because you want to give yourself enough time to develop. This first quarter is all going to be about developing your foundation, building your skill, and toward the end of the quarter, you should start to see some pretty good results. And our account should be doing pretty good. But you're gonna have to do that. So, for those of you who are signed up for the quarter, and all those who are already quarterly members, I do have several members that are quarterly members. I will draw somebody every month, just like I did this Christmas. I'll draw one of you guys, and I'll pay the difference for you to upgrade to a yearly membership. I'll pay that extra money to Omnovia so that you're here for the whole year. And I'll do that once a month for you guys, because I know you started like me. I was looking for a break. Any break I could get, I was looking for it. So I'm willing to help and do what I can to help you reach your goals. So again, this is open to all new and current members. So here's the front page of my website. All you have to do is click on join now. It'll take you to the sign in page. If you want to do mentoring, then you go to the page that deals with the mentoring. But it's just that simple. I'm all about keeping it simple and making it easy so you can understand and start applying it. So any questions, you can reach me at ed@averagejoetrader.com. I'll be glad to answer any questions for you. Or you can go through the contact me page. I can always answer you through there. So either ed@averagejoetrader.com. As a matter of fact, I'll go ahead and put this on here for you so you can see it. Ed, that's an and sign, isn't it? That's funny. I guess I need my glasses on. ed@averagejoetrader.com. You can email me. I can answer any questions for you. And we'll be glad to. Those that have emailed me in the past, I will email you back. You're going to get me whether you want me or not. So, you guys enjoy the rest of your weekend. And I will see you in the markets tomorrow.